Hello, everyone. My name is Toby Smith, and today I'll be presenting a financial analysis of Netflix. Over the next 10 to 12 minutes, I'll walk through the company's background, its income and cash flow trends, key financial ratios, market valuations, and strategic outlook. I'll also provide an evaluation of Netflix from a biblical worldview perspective. To start things off, Netflix is the world's largest subscription video on demand platform. Founded in 1997 and headquartered in Los Gatos, California, it transitioned from a DVD rental to streaming in 2007 and since expanding globally with over 270 million subscribers as of 2024. Netflix competes directly with Disney Plus, Amazon Prime, Hulu, Apple TV Plus, and others in highly competitive streaming markets. Its business model relies on subscription revenue, original content production, and international expansion. Now, looking at Netflix's income, revenues have grown steadily with more than 33 billion reported in 2023. Operating cost margins sit around 21%, and net income reaches approximately $5.4 billion. Earnings quality is relatively strong since revenues are primarily subscription based, providing recurring cash flows. Netflix reports comprehensive incomes, but the major driver remains net income, which has shown resilience despite the industry's competition and rising content costs. Netflix's cash flow trends reveal the story behind its growth strategy. Operating cash flows have improved as subscription revenue has increased. However, heavy investment in original programming continues to drive significant cash outflows in investing activities. Financing cash flow has fluctuated due to debt insurance. Though Netflix has begun reducing reliance on external financing as free cash flows has turned positive in recent years, this signals a maturing financial position compared to its earlier high debt growth stage. When analyzing ratios, Netflix shows mixed results. Liquidity is stable with a current ratio around 1.3, which suggests it can cover short term obligations. Profitability ratios, such as return on equity and net margins, remain healthy compared to its peers. Efficiency ratios reflect effective subscriber acquisition, though high content spending pressures operating efficiency. Market ratios include price to earning, having fluctuated with investor sentiment, but remain higher than many competitors, reflecting a strong brand value and growth expectations. Now, when it comes to market valuation, from a market valuation standpoint, Netflix stock trade is a premium compared to traditional media companies, reflecting investor confidence in its subscriber base and original content strategy. However, unrecorded intangible assets such as brand equity, proprietary algorithms, and exclusive content rights contribute to Netflix's true value far beyond what appears on a balance sheet. Analysis note that Netflix's valuation incorporates both its current subscriber strength and its potential to expand into gaming and advertising. So overall, they're pretty strong on the market. As I may mention in the previous slide, Netflix has a real good market valuation, and a lot of that comes from their strengths. Their strengths include global brand recognition, a massive subscriber base, data driven personalization, and strong original content like Stranger Things and The Crown. All of these can all of these contribute to how strong they are as a company. But they do have some weaknesses. Weaknesses include rising competition. There's so many people that are moving into this industry. Also, the dependence on continued subscriber growth. and high content spending, which pressures margins. Additionally, password sharing and market saturation in the US pose challenges for future growth as well. As we've seen in the previous slide, Netflix is a pretty strong company and has some good strengths. But looking ahead, what does Netflix have before them? What's the game plan for the future? Well, Netflix future prospects are tied to international growth, ad-supported subscription tiers, and expansion into gaming, which is pretty interesting. Analysts predict that these initiatives could diversify revenue and reduce churn. However, the company must continue balancing subscriber affordability with content spending. And that's very important. You've got to keep the people subscribing. If successful, Netflix will maintain its leadership in the streaming industry. If not, it risks losing market share to competitors with diversified revenue streams like Disney and Amazon because they've got money coming in from different avenues. So we've got to diversify, this company. Now we come to the part of this presentation where we take a biblical worldview evaluation company. From a biblical perspective, stewardship and integrity are key values that apply even to corporations such as Netflix. Luke chapter number 16, verse number 10 teaches that one who is faithful in very little is also faithful in much. Netflix, like any other company, is accountable for how it manages resources, treats their employees, and influences culture. As Christians, we should evaluate not only financial performance, but also ethical responsibilities. Companies are called to pursue profit with responsibility, reflecting Colossians 3:23, which reminds us to work hardly for the Lord and not just for men. As I looked at Netflix, I see that they have a host of different charities that they send money to. Wouldn't necessarily be considered a Christian organization or a Christian company, but I do believe that they do uphold ethical standards that is fair and reasonable and something to be proud of. In conclusion, Netflix stands out as a financially strong and globally influential company. Over the years, it has changed the way people watch television and movies, becoming a leader in the streaming industry. Its steady revenue and consistent cash flow shows that Netflix has built a business model that can withstand challenges and adapt to change. At the same time, there are real risks. Producing and purchasing content requires huge amounts of money, and the competition in streaming grows stronger and stronger every year as more companies enter into the market. These pressures mean that Netflix must carefully balance its spending with the need to keep attracting and keep subscribers. Even with these challenges, Netflix has major opportunities by expanding into new countries and cultures and by exploring different forms of entertainment such as gaming or live events. Netflix continues to look for ways to grow in the long term. Its global reach gives an advantage that few competitors can match. Finally, when we look at Netflix through a biblical lens, we are reminded that success is not only about financial numbers. Scripture teaches us that the wealth and resources are gifts from God, and we must manage them wisely and use them responsibly. For any corporation, including Netflix, financial stewardship should always go hand in hand with moral responsibility. That means using influence and resources in a way that honors God and benefits others, not just focusing on profits. This last slide contains the references that I used to complete this project. These references include Netflix's 10K reports, industry research from IBIS World, and then also data from Yahoo Finance and a host of others. I really did enjoy this project. I really did enjoy doing it. I learned a lot about Netflix, and I hope that you've enjoyed this project and this presentation as much as I have enjoyed making it. Thank you, and God bless.